The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello, and welcome to the COB on this Friday afternoon. I'm Nadine Blaney.
I'm Juliette Sali. On a positive day, a positive week, I think we're up by about 2% or something over the course of the week when you look at the ASX 200. Of course, the ECB following your friends over at the BOC. We had that both happen this week. Now, of course, a lot of eyes on what will happen with the Fed. So some positive buying coming through ahead of that key non-farm payrolls data tonight.
Yeah, interesting to see Aussie investors buying in, obviously global investors as well, but buying in ahead of a 3-day long weekend. That's what I was saying. So we've got, big risk event with the non-farms and the big, 3-day break for King's birthday. I find it difficult to say King's birthday still. Getting my tongue around that one. So yeah, good finish there for the CIBO Australia Index. We'll take you through the final figures for the S&P ASX 200 in just a tick. But, I suppose when we look back on this week, it will be the week that we started to see the G7 central banks
cut. Absolutely. So we had already Sweden, Switzerland, but Canada really kicking things up a notch this week. Then, of course, the ECB overnight. Now everybody's saying, the Fed will be next. I just had a great conversation with Dylan Wu from Pepperstone saying she doesn't see why there couldn't be a cut from the Fed in July. We've got non-farm payrolls tonight, as we mentioned, to see whether or not that is going to be a key case. CPI, PPI next week as well. And all of this playing through into the commodity space too, particularly gold, which is very much glistening.
So that was one of the strongest little subsectors on the local market today. I had a good chat with Lucas Santos from ACY Securities. So he just reckons, given what's happening with the central banks, given what is likely to happen with the dollar, that gold is the buy for this year. So going long on gold, and of course, still a very data dependent Fed, but we'll start to get a clearer picture tonight.
Yeah, and I liked your conversation with Heath Moss as well, who was saying, don't forget silver.
Oh, yeah.
Really good moves in silver
That's
as well.
a good one. It's up online, and he names ETFs, and he names how you can get some silver exposure here in Australia, because it's not easy. There's not a lot of silver miners, and usually silver is a byproduct of something else. Yeah, that was a good conversation.
Yeah. All right, let's have a look at the sectors as we round out the day's trade. And of course, we talked about, well, we didn't talk about iron ore, but we will now. BHP, Rio, Fortescue, South 32 all had a good day. Let's get to the gold players. That's what we were talking about, the big moves there. Newmont, I don't think we have the right price there. We're going to have to look into that. But Evolution, Perseus, De Grey, all looking very good there.
And tech today, well, a bit of a mixed picture, but Technology One hitting a record high. One person out there is very happy about that. In fact, I'm sure there's lots, but it was cute to see Mark Gardner from MPC Markets, who joins us regularly, tweet at Rudy Philippek Van Dyke, who also joins us regularly, saying, here you go, there you go, guys. Technology One record heights. And Life 360 in focus as well.
Yeah, absolutely. Life 360 today down, and that's because, of course, it was raising capital for that Nasdaq float, and it was closed yesterday in that raising and came back online overnight. In terms of some of the company-specific moves, we saw TechNut One there climb to a record high on these interest rate cut bets. A $5.9 billion market cap now.
Yeah, it's often talked about one of the highest quality tech companies on the ASX. I was just checking to see if there was a broker move in relation to it. Not so. QBE hitting its highest level since 2011. After rising, 1.5% today. So again, it's just a lot of this higher for longer that's been really taken hold, but, is the conversation changing?
Yeah, IDP Education had a huge fall yesterday. Today, coming back. Interestingly, Stuart Roberts from Stocks Down Under, he really likes that stock. Still a couple of broker downgrades though, but it came back after that heavy sell-off yesterday. Yeah,
you can find that interview with Stuart Roberts as well up online, ausbiz.com.au. If you listen to us in podcast form, we love you, but you should go to our website to check out all the content that we love getting together for you. GQG Partners, it jumped from 142 billion US under management to 150.1 US at the end of May, and it too, I think it hit a record high as well. Regardless, it was the stock of the day. We'll get there a little bit later on.
Yeah. Now let's welcome to the COB Sean Callow from Westpac. What are we?
He's actually independent. That's okay.
Oops, you can tell how long I've been out of Australia for. Sorry, Sean. Nice to see you regardless. Independent economist Sean at Callow. I just wanted to get your take on a busy week when we've seen the Bank of Canada, the ECB, and we're now looking ahead to what the non-farm payrolls is going to mean for the Fed.
Yeah, it has been massive. All those central bank meetings, and obviously we've got the next week very busy with the FOMC and the BOJ. So you can't brush them aside that a traditionally very wary institution like the ECB would cut rates at this point. The Bank of Canada too certainly doesn't take great risks with inflation. So I think it does have implications going forward. The other central banks do look at what each other's doing. And in the ECB's case, I think President Lagarde most notably was talking about the fact that as inflation eases lower, which it is pretty much all around the world, even if you're disappointed by the pace, and you're keeping rates steady, then that means higher real interest rates. And so she thought in terms that was a strong case for lowering rates at this point. Clearly, they're not in a hurry to act again, but it'll be certainly very exciting for whenever the Fed does kick off. It's probably a little way to go rather than certainly not next week, and July might be a little bit early too. But as you say, non-farm payrolls, just roll the dice and see what it comes out as.
Yeah, Sean, it was interesting, though, just to talk about the impact on markets of the ECB. There wasn't really a massive impact on the euro, was there?
No, I think that's often the case with the ECB, that they make their announcement. It was heavily priced in. They talked about it for so long. But also it's a case of how do you want to trade the very lengthy press conference? So is there a particular message from the prepared statement and from Lagarde's Q&A? And I guess the clear message there, and from subsequent Newswire source stories, was that the July meeting was quite unlikely. So that sort of dampened down expectations that there might be a follow-up too soon. But as they always say about central bank policy, rate changes, it's like you see one cockroach, and it's never just one. There will be more.
Yeah. All right.
Yeah, I don't like that analogy. I try to ignore that. I think in my house, no, there's just one. Okay, well, another busy week ahead too. Let's turn to our market, because GDP, of course, showed that we very much crawling at the moment. We've got another quarter of GDP before we see the impact as well of these tax cuts coming in, wage increases for lower paid workers, the energy rebate. But what's your view, particularly as we look ahead to the labour force data as well next week?
Yeah, so I guess the job market certainly has held up pretty well. It was eye-catching last month to see just that little increase in the unemployment rate to 4.1% was enough for that to be the equal highest rate since early 2022. So that can undermine confidence somewhat, even though historically it is quite low. The RBA probably thinks that it's the job market is either at full capacity or close enough to it in terms of their estimates of full employment. So it should be another decent number. I guess the market's looking around that 25,000 increase in jobs, but we'll look at the breakdown, and markets will be sensitive to it because they've been so fluid in terms of market pricing. A week ago, the RBA pricing by year end was for no change in rates by December, and now it's around about the 9 basis points. So it will flick around. Obviously, it'll be impacted by what happens overseas, but domestically, if we did have a weak jobs number, then that would certainly get markets excited about RBA easing, maybe November.
Well, okay. Yeah, so November is still sort of being touted, I guess, widely as the first opportunity to cut. So what happens to the Aussie dollar? Are we going to be breaking out of that range that we've really been trading in?
Well, certainly hope so. Any currency strategist would hope so. This week it didn't even lose the 66 handle. I think it has traded something like 66.26 to 99. So we'd like to see a bit of action. I'd say that I'm inclined to think that heading into next week, with US yields where they are, the 2-year yield is at the low end of the ranges so far of Q2. I'd be inclined to think a risk reward is probably that yields bounce, and that maybe the Fed, even though they could cut later in the year, that they maybe the sentiment or the commentary comes out a little bit on the hawkish side, and all the updated forecasts, etc. If that's the case, then the Aussie's probably a good sell in that 67 area, which has proven to be very difficult. So range bound for the short term, but given this event risk, it may well be that if you sold it around 67, you could aim for, say, 65.
All right. And speaking of event risk, I mean, we touched on the non-farm payrolls tonight. The movements that we might expect to see in, I guess, both the dollar and gold.
Obviously it's been a massive year for gold, and the prospect of lower rates. I'm surprised that it would be quite so strong, given that the US dollar has been, for the most part, pretty resilient. So strap yourself in for a volatility. The forecasts are what they are, but there is always that real risk of, particularly the first estimate, being well away from consensus, and it will inform that decision next week. So it's good timing to have a payrolls report heading into the Fed. They'll finalise their quarterly forecast, their unemployment rate. They expect unemployment probably nudge up by year end, but if that's not the case tonight, then yields probably hold up. If that's the case, then that probably a bit of a setback for gold short term.
All right, well, I guess we're just going to have to wait and see, aren't we? Sean, it's a real pleasure to have you join us on a Friday afternoon to help us wrap the week and take a look to the week ahead. Thank you.
You're welcome.
Sean Callow there. He's a macro strategist there, joining us live. It's nice to see him. Usually we've got a glass of wine in our hand.
Oh, yeah, but I told you I'm off.
We're on the wagon.
On the wagon.
No,
I never know if I'm off or on the wagon. Pretty much I'm always off. Anyway, today I'm on the wagon. Our stock of the day was GQG Partners.
It was Mark Gardner from MPC Markets. Luke Winchester from Merriweather Capital gave us their take on the call.
I think this has got, if they stick to their, their ethos, I think it's a really solid platform for them to continue to grow, because customers will always be attracted to something that's in their interests rather than someone who's just taking fees.
I tried to annualise some numbers. It's hard to do. Obviously, you need to know the fund coming in, where it's going to, and all that sort of stuff. But I sort of came to about 12 to 13 times earnings, which is a pretty fair price for these managers. It's where they should trade. But to that point before, they're still growing strongly. They're doing the right things. And I think they really market themselves and put themselves in a very interesting competitive position, particularly compared to other active managers. So I'll say a buy as well.
I think that was a double buy.
Yeah.
There we go.
Well,
GQG, follow
GQG.
the funds. Fund flows.
Let's follow the leaders as well. IDP Education making a comeback after yesterday. Boss was a really good one on that energy move, as was Regis on the gold move, and Newmont. There we go. We finally got the right one. Up 3%, $63.63.
Citi also put out a note just saying that the nuclear evolution that's happening in the United States is good for some of these Aussie uranium plays. I know that will make a number of people out there happy. Uranium is just one of those things that's always trending. They're really bullish on it, and lots of news flow. Nanosonics, no news flow, but it has been a busy week. It's been very volatile this week. Aurora also on that list, but Life 360 after that US listing getting a bit punished in local trade.
All right, having a look at the smaller end of town.
Not much that I can add here, but Brockman Mining, we will be looking in to see what that 43% move is. Novonix up by 10% as well. Flipping the page.
Yeah, to the downside. Anson, Astron, Elixir, Macro and Shine. And I'm interested to see that LTR Pharma wasn't there, because they had a big move today. At one point, I think they were up something like 40%, of course, going into that oral nasal spray.
Yep.
Yeah. All right, let's have a look at what is happening. What is happening with me? What is happening tonight? The non-farm employment change, the big one we're looking at, the payrolls data.
We've also got some data coming out in Canada. Of course, the dust settling on that Bank of Canada interest rate cut. The FOMC member Cook speaks as well, but we're not going to be hearing a lot from these FOMC speakers. They will be going to a blackout period. And today, I should say on Monday, we've got markets closed for the King's birthday.
Yeah, own blackout period. As you say, still getting used to saying King's birthday. We've got NAB business confidence next week, the big one, the jobs data. Had a great conversation earlier about that and what we can expect with a number of people. Also Dylan Wu from Pepperstone, a really quite like her. We'll get her on more. She had some really interesting things to say. The FOMC decision and the Bank of Japan meeting as well next week.
Yeah, it's a big one next week, actually. In Aussie company news, we're expecting to see Virgin Money UK releasing earnings on Thursday. And we've got investor meetings for Piedmont Lithium, Superloop, and Enabel Rodemco Westfield. So yeah, we've got some corporate stuff as well. It was a pretty quiet one on the corporate front this week, you've got to say. You know, we're starting to have more and more conversations, Juliette, about what to expect in reporting season. It is that time of year.
It is indeed. All right, we are 1 week into June. Hard to believe. Take care out there, especially in the areas that are wet at the moment. Be safe. We'll see you on Tuesday.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.